If you think the silver market moves on its own, think again. Right now, as you're watching this, one of the biggest banks in the world is quietly controlling the silver price, and what they are doing this week could change everything for small investors, traders, and even the physical silver market. Stay with me, because in the next 10 minutes, I'll take you inside the secret maneuvers of JPMorgan and show you how a few people are influencing millions of dollars in silver trades while almost nobody notices. Before we dive in, make sure you hit that like button and subscribe to Silver Uncovered. Trust me, you don't want to miss any of the upcoming videos that break down exactly how Wall Street moves behind the scenes. JPMorgan has been under the radar for years when it comes to silver. They hold one of the largest positions in both paper silver and physical silver, which means they can push the price up or down with precision. But this week, it's not just about holding positions. They are actively managing the market in ways that only a few insiders can detect. Most people see the price chart and assume normal market behavior, but what we see when we dig deeper is a deliberate plan. Think of it like a giant seesaw. When JPMorgan wants the silver price lower, they use their enormous paper contracts to suppress it. When they want it higher, they buy aggressively. But here's the catch. This week, it's a combination of both. They're pushing the price in a very specific range, creating fear and confusion at the same time. To understand what's happening, you need to know how paper silver works. Paper silver is basically contracts, promises, or derivatives that track silver prices without delivering actual physical metal. JPMorgan owns a massive portion of these contracts, which means they can flood the market with fake supply, making it look like there's more silver available than there actually is. This week, they've been strategically selling large volumes of paper silver just as physical demand rises. The effect? The market sees a sudden dip in silver prices, small investors panic, and some even sell their physical holdings thinking the price will fall further. Meanwhile, JPMorgan quietly adds to their actual physical silver reserves, locking in real value at suppressed prices. But it's not just about selling paper silver. Timing plays a huge role in this week's plan. JPMorgan knows that major economic reports, interest rate decisions, and gold market movements all impact silver. By coordinating their trades right before these announcements, they can amplify volatility. For example, if a jobs report comes out that could push inflation higher, silver normally spikes. This week, JPMorgan preemptively flooded the paper market to prevent that spike, controlling the narrative and keeping prices lower than they should be. It's a classic move we've documented on Silver Uncovered before, but this week, it's more aggressive than ever. You might be wondering, why would they do this? The answer is simple: leverage and control. By manipulating silver now, JPMorgan ensures that when real demand for physical silver surges, they are in a position to profit immensely. Every suppressed dollar in silver this week is essentially free money when the market eventually corrects. And they know the market will correct. Historical patterns show that whenever paper silver controls are too tight, a squeeze is inevitable. But for them, the timing is everything. By keeping the market artificially calm right now, they maintain dominance until the moment they decide to push it higher. And that could happen within days or weeks. One of the most interesting signs of this manipulation is the unusual trading volume and price patterns we have seen this week. Normally, silver moves slowly during weekdays with predictable spikes after major news. This week, there have been sudden sharp spikes and drops within minutes, almost like someone is testing the market's reaction. Traders call it spoofing, placing large orders that never execute to trick others into thinking there is more selling or buying pressure. And guess what? The largest player behind this is almost always JPMorgan. They use these tactics to create artificial fear and greed, keeping other investors off balance. Physical silver demand tells a story that the paper market is trying to hide. Retail investors, mints, and industrial buyers have been quietly snapping up real silver coins and bars, especially in the US and Europe. But the market price hasn't reflected this real demand because paper silver is being used to suppress the effect. This week, the gap between paper and physical silver is widening, which is exactly what JPMorgan wants. They profit not only from controlling price, but also from being the middleman between physical silver buyers and the artificially manipulated market. Now, let's talk about the timeline. This week, leading up to the midweek economic reports, JPMorgan has been steadily selling paper silver in small, calculated amounts. Each move is precise, aimed at keeping the silver price within a controlled range. Observers on the trading floor have noted that these are not random trades. They align perfectly with algorithmic patterns designed to maintain market stability for their benefit, not ours. It's like watching a chess master play a game where everyone else thinks it checkers. By the end of the week, we expect a few key outcomes. First, silver may look weaker than it really is. Many traders will exit positions, thinking the market trend is down. Second, JPMorgan will have quietly acquired more physical silver at a lower cost. Third, The conditions will be perfect for a potential surge once the paper manipulation eases, or when external economic triggers force the market to adjust. This is why anyone watching from outside the loop sees confusion and unpredictability, but those of us tracking it at Silver Uncovered understand the pattern. It's important to note that this isn't illegal in a traditional sense, though it is heavily debated among regulators. Banks, like JPMorgan, operate within the rules, but exploit loopholes that allow them to move markets far more efficiently than any retail investor. And weeks like this show exactly why understanding paper versus physical silver is crucial for anyone invested in precious metals. So, what should small investors do? The key is awareness. Watch the physical silver demand, understand that the price charts you see may not reflect reality, and avoid panic selling during these manipulated dips. If this week is any indication, the smart move is patience. JPMorgan and similar institutions are playing a long game, and rushing decisions based on temporary drops is exactly what they want you to do. Silver Uncovered will continue tracking every move, every paper silver contract, and every unusual spike, so you can see the bigger picture. Right now, being informed is the most powerful tool an individual investor has. Even if you're not trading right now, understanding the mechanics behind these price movements will make you much more prepared when the next big shift hits. Before we wrap up, if this video gave you insights you didn't know before, comment below with your thoughts. Share it with anyone invested in silver, and make sure you're subscribed to Silver Uncovered. The more people understand what's really happening, the harder it is for these manipulations to go unnoticed. And trust me, the week ahead will be critical. Keep your eyes on silver, watch the market carefully, and remember, the real story is always behind the scenes.